if you look at, I mean, I can assure you that we have a higher percentage than that of people who are successful traders year in, year out. But I think that what people have to look at is that, it's quite interesting. When I was building trading systems in the UK, when I was running a trading systems business here, you tended to find you went to talk to someone who was a trader and they traded one asset class. Even if they were trading in the futures industry, they may only trade, they may only trade sort of boom, bobble, shat. They may only just trade a very, very narrow selection of products. When I went out to Asia, it's quite interesting, and this is not obviously every country, but people would trade whatever was volatile. So 1 minute they'd be trading gold, then because for example in Hong Kong, the Hong Kong stock market was going through such a growth period in sort of 2006 through to 2009. People stopped trading gold to an extent and stopped trading currencies, and they were all trading the Hong Kong stock market, and then it suddenly swung back to gold, etc. And I think that gave me sort of an interesting insight. And if you look at trading patterns, there is software coming onto the market now, and we've been involved in looking at this, which actually analyse someone's trading patterns and start actually helping them understand when they're making successful trades and when they're making less successful trades. And quite often you can determine that when the volatility is above a certain level and someone is trading G10 currencies, then 60%, 70% of their trades they get right. And when the volatility drops below a certain level, their ratio goes different. Or maybe that they're really good at trading in a highly volatile market with FX, but less good at trading indices, etc. So there are products coming onto the market that, although you may intrinsically know when you're a good trader and when you're not so good, there's software coming on the market now which will help you. And will actually say to you, look, the conditions are now good for your trading style, or the conditions are now bad for your trading style. And they'll help, and there's obviously, and so I think that some of these tools that are coming on the market are incredibly helpful, rather than just instinctive trading, because they can give you statistical support. And obviously, some of those products can say, and historically, when you close a position, you close it, X pips too late. You're consistently, if you close it just a little bit. So when you're starting to think about closing, close it then rather than consider it a few more minutes, etc. Or when you're thinking of taking a profit, historically you always seem to take it just a little bit too early. So maybe that's an oversimplification, but there's technologies coming around now which will actually analyse your style, look at how you're trading versus how the market is operating, and start helping you and giving you guidance.